the developments in the Americas is certainly worrisome. But if you look at the global picture, there, except for the countries that are seeing resurgence of the epidemic curve, the cases or the continued deterioration, actually, if you look at Asia and Europe, the situation seems far more stable, and these are important drivers of global growth as well. So while we closely monitor the situation in U.S. and Latin America, we think that the broader context of a global recovery still hasn't changed. And just in terms of the ability to manage the reopening process and also the second wave infections in the second half of the year, again, our suspicion is that the private individuals are still much more disciplined in how they go about their daily routines compared to the initial period of this pandemic. And also, we continue to have better visibility on scientific solutions to the disease. So we stick to our scenario of a global growth recovery, already ongoing and in the second half of this year. And therefore, we continue to keep our preferences for select risky assets for that period.
Okay, what are some of those riskier assets? Because I note that you say your portfolio is made up between 50 to 85% in some of those risk assets.
Well, so we think it's always nice to start from a position of humility. So when we construct portfolios for our clients, we, first of all, for 50 to 85% of portfolio, we always maintain, the steady exposure to a risk-based multi-asset portfolio. So that just means that you go for a maximum diversification or key asset classes. But on top of that, we maintain a mixture of recommendations for U.S. large cap equities because we think large companies are better able to withstand the shock and navigate this environment. And also for the regions that we think are very well positioned to navigate the environment as well. So Asia ex Japan, I think they have proven their resilience so far, and they're quite well positioned for the global recovery, and they have the policy lag room to add more support domestically if needed. So Asia ex Japan, we maintain our preference for the region. We also believe the new situation has forced the European policymakers to be serious about solidarity in the region and also a better policy. So we have recently introduced exposure to European equities as well. And on top of that, we continue to maintain our preferences for investment grade and high yield opportunities in Asia hard currency credit.